stocks climbing today. The S&P 500 on track for its best week since the election. Joining me now, we've got Robert Pavlik, who is the Dakota Wealth Management Senior Portfolio Manager. Good to have you here on the show with us. Robert, you say that you are more cautious in the near term, but cautiously optimistic for the year. Why is that?
Well, I think that, the market had a bit of a check back. We got down about 5%. And I think there was a little bit of realization after the election that, first of all, things were going to go great. Trump was going to have these deregulations. He's going to sort of cut taxes. Business would do very well. And I think that there was a little bit of a realization that, interest rates were on the rise. It was because maybe Trump was going to cut taxes. It was going to increase the deficit. Trump is talking about tariffs. He's talking about deportations. And I think all together gave the market a bit of a sort of a realization that maybe, things may not go as smooth. Also, inflation continues to be a bit of a concern. Bond yields at 460, on a 10-year is still a bit elevated. Valuations are a bit high, about 22 times, about 10% higher than the 5-year average. There's questions about earnings growth. But I think as we go through the year, things start to look a little bit more optimistic. I think earnings, the market's going to realize earnings are going to grow probably around high single digits, about 9%. The economy will continue to grow, maybe about 2.5%. It's not a recession by any means. Valuations will ease. I think tariffs are really just a bargaining chip. Mass deportations are not going to happen. Trump's energy policies are going to probably help lower the price of oil and gasoline, and that should help inflation ease. And I think as we get to sort of the middle of the year, there's going to be more and more talk about the Fed returning back to the market, maybe a couple of interest rate cuts. And I think we actually end up having a pretty good year. I have a target of 6750 on the S&P 500. So I think, something like 13-14% from here is actually a pretty good year.
It's really interesting, especially considering the cautious optimism that you were discussing versus something like what Jamie Dimon was talking about in a CBS interview earlier this week, which was cautious pessimism. So, and I should say that his was more focused on the economy. So how do you see and pair kind of the cautious pessimism from the chairman and CEO of the largest bank in the U.S. versus what the markets might maintain as cautious optimism?
With all due respect to Jamie Dimon, he's actually been wrong several times. I think that there is a reason to be cautious near term. I think the first 100 days of the new administration's policies and what they bring to the table is going to create a little bit more nervousness in the market. But I think that all sort of plays out as we go forward. And again, I think the optimism that the Federal Reserve returns back to the market with interest rate cuts because they don't want the economy slowing into next year actually helps lift the overall market. Once we get to a more rational point of valuations, that helps lift the overall market later on. People start to feel a little bit better about returning to stock purchases. Now, again, this seems a little bit ridiculous when the market's up almost 400 points today. But again, I think there's some nervousness heading into, first quarter earnings season, what the, first 100 days looks like. Inflation still remaining a bit high. But I think that all sort of works out as we go forward. I think the key to some of the inflation numbers is, again, Trump's policy towards energy. He's going to pressure the oil companies to continue to pump out more oil. And that helps reduce the price at the pump, which also helps reduce the cost of groceries at the grocery store. And people start to feel a little bit better.
All right. We won't debate Jamie Dimon, but you say he's wrong, and JP Morgan says he's worth $36 million last year.
Yeah,
we'll continue to discuss that at a future date. We want to get to some of your stock picks for us. What are you watching right now?
So one of the stocks that I like is Lululemon. The stock has a great looking chart. It looks like it's a big cup and handle. They reported a good earnings back in December. They reported just an increase in estimates for the fourth quarter. The holiday season had good earnings, good sales. They have a good membership program. There's a real dedicated customer base. I think you're probably looking at about 450 on that stock. That's about 16% upside. The next name is Cummins, CMI. And again, I think the key to this is power generation. So there's demand at the data center and power generation. Earnings are expected to grow about 10%, a price target of $400. That's about 10% upside, trades at 1.9 peg, which is about 9% below the 5-year average. And the last name is Quanta Services. And Quanta Services has a record-breaking backlog, strong demand for future products. Data centers, aging power grid are the reason why this company's moving forward. And actually, I hate to say this, but it's true. They have operations in LA. They have a subsidiary about 40 miles outside of LA. Earnings are projected to grow 18%. I have a price target of 370. That's about 16% upside on that stock.